What if I told you that the silver market doesn't need to crash to cause chaos, and it doesn't need to rally either? All it would take is silence. Just 48 hours where silver trading stops. No quotes, no futures, no clear price anywhere. Most people would barely notice at first, and that's exactly why this scenario is so dangerous. Because when markets fail, they don't always fail loudly. Sometimes they fail quietly while everyone assumes everything is fine. Picture this. It's a normal weekday morning in the US. You check the silver price like usual, but instead of a number, you see a message. Trading temporarily paused. No explanation, no timeline, just paused. At first, it feels like a technical glitch, something that will be fixed by lunch, but hours pass. Then a full day, then a second. And suddenly, people start asking questions no one is prepared to answer. Before we go deeper, if you care about understanding silver, gold, and the hidden stress points inside the financial system, make sure you subscribe to Safety Metals Health. This channel focuses on what most models ignore. And if this video challenges how you think about markets, please like and share it so others can see it too. Silver is not like stocks. It's not even like gold. Silver sits in a dangerous middle space. It's traded like money, but consumed like oil. It moves through financial contracts and factory floors at the same time. That means when trading freezes, the damage doesn't stay on a screen. It spreads into the real world. During the first few hours of a trading freeze, everything looks calm. News outlets stay quiet. Markets elsewhere continue moving. But behind the scenes, uncertainty starts to spread. Dealers don't know what price to quote. Industrial buyers don't know what contracts are valid. Hedging systems stop making sense because they depend on constant price updates. And here's the key problem. Modern markets assume that prices are always available. Risk models, margin requirements, collateral values. All of it assumes silver can be priced at any moment. A 48-hour freeze breaks that assumption instantly. Banks and funds don't panic right away. They hesitate. And hesitation is where cracks form. Silver is embedded in electronics, solar panels, medical devices, electric vehicles, and defense systems. Manufacturers rely on steady price signals to manage costs and supply chains. When those signals disappear, even briefly, decisions stall, orders get delayed, inventory strategies change. And nobody wants to be the last one relying on an outdated price. Now imagine this freeze happening while inventories are already tight. Imagine traders knowing that physical silver is harder to source than the paper market suggests. When trading resumes, the first reaction wouldn't be confidence, it would be protection. Some players would rush to reduce exposure. Others would demand physical delivery instead of rolling contracts. Dealers would raise premiums, not because the price went up, but because trust went down. This is where most models fail. They assume that once trading resumes, everything resets, but trust doesn't reset on a timer. Once participants realize the system can pause, they start asking what else can pause. And that question changes behavior permanently. After a freeze, the official silver price might still exist, but fewer people would rely on it. Physical markets would start operating on their own logic. Private deals, negotiated prices, supply-first thinking. That's how a temporary event becomes a structural shift. And the most dangerous part? None of this requires panic. No crashing charts, no dramatic headlines. Just a quiet realization that the system is more fragile than advertised. This is why a 48-hour silver trading freeze is not a small event. It's a stress test the system has never truly passed. Silver touches too many industries, too many balance sheets, and too much trust. If this scenario makes you uncomfortable, that's a good sign. Leave a comment and tell me whether you think markets would absorb a short silver freeze or whether it would change behavior forever. And if you know someone who believes prices always tell the truth, share this video with them. Because sometimes the biggest threat isn't what markets do. It's what happens when they stop. Stay curious, stay aware, and keep questioning the assumptions everyone else takes for granted.